Hello everyone, welcome to ACCA P6 Advanced Taxation. We have finished our employment income and we have also seen the difference between employment and self-employment. And then we have also seen the badges of trade, in which we determine that if we are doing the trade, we have to pay trading profits like income tax, and if we are not doing the trade, if we are just selling one-off asset, or we have inherited or we have received assets accidentally, not intentionally, unintentionally, then if we are disposing of them assets, then we'll have to pay capital gains tax on that. So there were different criteria which is known as badges of trade, like subject matter, how often we do that transaction, likewise, and how we have got that asset and stuff like that. Now we are going to practice that stuff which we have seen so far in employment income, and also in difference between employment and self-employment. So if you could please come to question number 7 of BPP exam kit. I hope that by this time you already have BPP exam kit. If you haven't, please make sure you buy BPP exam kit, or if you have any other exam kit. The question name is Kate and Ravi, and it was examined in June 2015. Excuse me. Now we won't do the whole of this question. We will only do part of it, because capital gains tax, we haven't studied capital gains tax yet. So when we will study capital gains tax, then we'll come back to this question and we will do the capital gains tax part as well. Anyway, let me also share the question with you through the screen share option. Here you go. You can see on your video screen question number 7, Kate and Ravi. Always read the question requirement first, so you will have the requirement in your mind while reading the scenario. It will make you understand the scenario in an easier way, because you know that while reading the scenario you will already know that what the examiner is asking me. Alright, and many students find the exam requirements difficult as well, that what is the examiner asking me about. And read the scenario carefully as well, because there will be lots of things going on in advanced taxation. And when you see any information in the exam, ask yourself, why am I given this information by examiner? What examiner wants me to do with that? So that's very, very important in order to pass this paper, advanced taxation. I've seen in student answers many times that they don't read the requirement clearly, and examiner is asking something else, they're writing something else. So it's of no use. You're just wasting your time. Just plan your answer. Don't just write down. Just plan, think, and then write. Because if you're just writing down, you're just only wasting your time. So it's always better idea to write good 2 points instead of writing 5 wrong points. So think wisely, plan your answer, then write it. Why am I giving this information? What the examiner is asking me, and stuff like that. Right? So enough talking, enough exam tips. Let's move to our question requirement A. It says calculate annual cost for CAT after income tax and national insurance contribution of D design employing the part-time employee. Now read the scenario now, please. So basically we know that he's asking annual cost for CAT after income tax and NI of Design Limited employing part-time employee. So basically a company is employing part-time employee, and probably the CAT will be owner of that business. So that's what the examiner is asking, that what would be cost for CAT employing part-time employee after paying income tax and national insurance contribution. Right? Now read the scenario from the start. CAT requires advice on the after-tax cost of saving and cost of taking on a part-time employee, and tax implications of starting to sell items via internet. A CAT's husband Ravi requires advice on blah blah blah. We won't do that part anyway. So let's read the information about CAT. Is resident and domicile in the UK, is married to Ravi, runs a successful unincorporated business which is named as D Designs, receives dividends of £33,000 every year, wants to sell some second-hand books online. And what is D Design anyway? It was set up by Kate in 2011 is now making a taxable profits of £90,000 per annum. So that these are the profits of £90,000. Right, then after that operates a number of dress shops and already employs 6 full-time employees, 6 full-time staff. So already they are quite successful. Requires an additional part-time employee, so that's what she's asking, that's what examiner is asking about. So she wants to employ a part-time employee. What would be the cost of that part-time employee? So we will be given some information about the employee, then we will decide that what would be the total cost to the employer after paying income tax and NI. Right then, part-time employee, proposed remuneration package. Salary will be paid £12,000 per annum because she is only part-time employee. Qualifying childcare vouchers, £25 per week for a full year, which is 52 weeks. Then a mileage allowance of 50 pence per mile for 62 miles round trip required each week to redistribute stock between the shops, and this will be done for 48 weeks in the year. So chances are that employee is using his own car, and so that the employer is giving the reimbursement of the fuel allowance in shape of per mile charges. So this employment will be the employee's only source of income as far as tax is concerned. And after that it says sale of second-hand books. We will deal with it later on. So this is the only information given to us, and we have to answer requirement A. Now we have read the scenario as well. If you want to read the requirement again, you can do so. So basically he's asking us to calculate the annual cost for Cat, who is owner of that business. What would be the cost to the company of employing part-time employee after considering income tax and national insurance contribution? There will be one class 1 NI of employer and class 1A as well, as far as benefits are concerned. Alright, so there will be 2 kinds of national insurance contribution as well, which will be paid by the employer. Right then, let's start the question then. Let me cancel the shared screen. Right then, so first of all we will write down the salary. Let me also write down the annual cost for whom? Cost of redesign. So this is the annual cost of redesign employing part-time employee. So salary will be paid how much? £12,000. £12,000 is salary. Then she will be paid qualifying childcare vouchers. So childcare vouchers will be paid as well, and these are paid how much? £25 per week for 52 weeks. So £25 multiplied by 52 weeks. So this is the cost of the childcare vouchers. Then mileage allowance will be paid 50 pence per mile. So mileage allowance. So mileage allowance is also paid. And mileage allowance is paid as 50 pence per mile for 62 miles. So 50 pence is it? 50 pence per mile for 62 mile round trip. Yep, 50 pence into 62 miles for a round trip, and round trip that is required every week. So that is, if you want to multiply by 1, you can do so, or 62 is exactly fine. And multiply by 48 weeks these are. So multiplied by 48 weeks, right? So these are 48 weeks. So that is our mileage cost. And apart from that, employment will be the only employment. That's it. So we don't have anything else apart from it. Right then, so if we want to do the multiplication, please you do so as well, while I do it on the calculator, on my this funny calculator. Multiply by 52, right? Right then, anything else? Now on that, on top of that, this is the cost of the the salary and the benefits. On top of that, the employer company will also have to pay class 1 NI on that. All right, so we'll add that as well. So we'll add a class 1 national insurance contribution, employer. Right, so how will we calculate? We can write down working one here if you want, because there will be a lot of things here, not a lot of, basically a couple of things. So national insurance contribution, so that's national insurance contribution, and it is employers, that is employers, class 1. Now employers contribution class 1 will be paid on salary, bonus and excess mileage allowance. So we got salary here, we also got mileage allowance, but we have to determine if it is excessive or not. Now for first 10,000 miles it is 45 pence per mile. So however in this case it is 50 pence per mile, so we know that it is more than 45 pence. So there is excess mileage allowance and as well, which will be subject to class 1 employers NI. All right. So first it will be paid on the salary. So what is the sales? What is the rate of the employers NI on the salary? I will have to check it from the lecture notes. Now these national insurance contribution rates will be given to you in the exam anyway, so you don't have to worry about that. So that is our excess mileage allowance, and we'll have to multiply that by 13.8% as well. So that is our class 1 employer NI on the excess mileage allowance. So basically 0.5 was per mile was paid, whereas how much is allowed? 0.45 is allowed. 0.45 is allowed, and exactly the 62 miles will remain exactly like it was, and the 48 weeks are exactly the same as well. So that is our excess mileage allowance. So we will pay employers class 1 NI on the excess mileage allowance. Right then, and also if you remember there was £3,000 exemption as well for employer, but because he already got 6 employees, I think in the question it says, so there are already 6 employees, so hopefully she would have used the employer exemption of £3,000 already, so we cannot deduct that exemption. Right, so whatever this total is, please make sure you redo this total. So whatever the total is, this total figure will go in this column. Right, so that will be our class 1 NI of employer. Right, so that is our total. Now although this is the total cost, but we will be saving, she will be saving some costs as well, because she is employing someone. What would she be saving? She would be saving this amount. If she would not have hired this employee on this salary, she would be taking this amount in her pocket. Now when she would be taking this amount in her pocket, of course she will have to pay income tax on that, right? So this figure will be subject to 40% income tax. Now why 40% income tax? Because in the question it says she's already earning too much. She's taking dividends, and she's got a profit figure as well of £90,000 per annum. So it tells me that £90,000 is taxable profit, and £33,000 are the dividends. It is telling me that she's already got enough money, so she's paying income tax at the rate of 40%, right? So she will be saving income tax at the rate of 40% if she hires this new employee at this package. All right, so this amount will be multiplied by, so this amount multiplied by 40%, so that will be tax savings, which will be deducted out of this one. Now of course she's saving that amount, but she's also saving class 4 NI, because her profit would be reduced. So her profit won't be £90,000, so her profit will be reduced by this amount as well. Now if her profit is reduced by this amount, of course she will have to pay less class 4 NI. Remember, class 4 NI was only payable when the self-employed person making the taxable profit, right? because she is earning £90,000 a year, so of course she will have to pay this NI at the rate of 2%. So what would be another saving? The another saving would be this figure multiplied by 2%. So basically that is our income tax saving, and that is our class 4 NI saving. So that is our class 4 NI savings. So this figure, whatever the salary is, multiplied by 2%, that would be our saving for class 4 NI. Right, so this will also be deducted out of this one. Now on top of that, because she's too much rich, we will also have to consider her personal allowance thing. Now I can see that because her salary was, her profit was £90,000, and she was also taking dividends of £33,000, so how much would be her total? So let's consider personal allowance as well here. Personal allowance. Personal allowance tax saving. Personal allowance tax savings, and I will write it down as working 2. Now working 2 would be personal allowance. Now we'll have to see how much was her personal allowance before. So personal allowance before hiring. So personal allowance before hiring a new employee. So personal allowance before hiring a new employee would be taxable profits. Let me see how much are these. I think it's £90,000, isn't it? I'm sure it is £90,000, but yep, taxable profits are £90,000. So taxable profits £90,000, and dividends are £33,000 each year, which makes a total of how much? 9, 3, 20, 23, £123,000. Right, that is 123,000. Now whenever our adjusted net income, so this income would be adjusted net income because there isn't any personal pension contribution in this question mentioned, so this would be adjusted net income. When adjusted net income is over £100,000, our personal allowance is reduced by some amount. It could be nothing as well. So we'll have to see now. So £123,000 less £100,000 is equal to £23,000 is equal to divided by 2, which gives me the figure of 11,500. Now this our personal allowance would be reduced by this figure. So our normal personal allowance is 11,500 anyway, so it will be reduced by 11,500, which will make our personal allowance as 0, right? So a normal personal allowance is equal to 11,500 reduction is equal to 11,500. So personal allowance is equal to nil. Now that is our personal allowance before hiring the new employee. Now if we hire the new employee, what would be our income? Now of course our adjusted income won't be £123,000 because we will be paying this figure to our employee as well. Alright, so out of this £123,000, this figure will be deducted. Of course, if this figure, the salary and this package will be deducted out of the total takings, then this figure will be reduced. Now if this figure is reduced, then eventually this figure will be reduced as well, and this figure will be deducted out of our personal allowance. So our personal allowance, although will be reduced, but it won't be reduced to 0, so it will be more than 0. Now whatever our personal allowance will be, reduced personal allowance, now we will be saving tax at the rate of 40% on that personal allowance. Why would we be saving the tax at the rate of 40%? Because she is a higher rate taxpayer already. That's why we have taken 40% here as well, right? Because she would be saving the tax at the rate of 40% because her income is well over basic rate band limit of 33,500, right? So she will be saving tax on that amount as well on personal allowance. Whatever personal allowance she will get, she will be getting that personal allowance because she is hiring new employee. Now, because she is getting the personal allowance because of hiring new employee, that personal allowance will be saving tax at the rate of 40% because she is a higher rate taxpayer. If she would not have hired this new employee, she would be paying, she would not receive the personal allowance. So of course, if she would not receive the personal allowance, she would be paying tax at the rate of 40% on this personal allowance figure. All right. Now, I hope that it is making sense because there isn't anything technical in it. But I won't do the remaining bit of the question. I want you to do the remaining bit of the question. So what you would do is, this was the personal allowance before. Now, after hiring new employee, she will be paying this salary, so which will be deducted out of the 123 total, which will eventually reduce our personal allowance. But of course, our personal allowance won't be zero. It will be more than zero, about, I don't know, it will be more 5,000–6,000 pounds maybe. So if it is 5,000–6,000 pounds, we will be saving tax at the rate of 40% on personal allowance. Why? Because she is already a higher rate taxpayer. Higher rate of tax is 40%. So she will be saving the tax at the rate of 40%. So this figure will also be reduced out of this total. So the net cost of hiring this employee will be this figure after deducting the personal allowance and these two figures as well, right? So that is basically this question, part A of this question. Right then, so I hope that you can do the remaining bit. If you still find any mistakes or if you can't understand anything, just check the answers of this from the back side of the exam kit, or if you are still unclear, then just drop me an email. Right now, if you come to the same question, part B of the same question, please. It says, discuss whether the profit from Kate's proposed sale of books via the internet will be liable to either income tax or capital gains tax. Now, what are these online book stuff? Now, check in the scenario where it says sale of second-hand books. Sale of second-hand books. Now, in there it says the cat inherited a collection of books from her mother in December 2016. The cat intends to sell these books via the internet. Some of the books are in damaged state and cat will get them rebound before selling them. So this is the only information given to us. So she is willing to sell these books which she has inherited from her mother. Now the requirement is whether she will pay capital gains tax on that or she will be paying income tax. Now we will pay income tax when we know that we are doing the trading. So it will come under the trading profits. However, if we can determine that these are not trading profits, we are not doing the trade, we are not doing the business. However, these are capital assets which we have inherited or which we were gifted unintentionally. So our intention was not to get them assets. So we did not know that we will get them assets. In that case, it would be capital gains tax. It would be, we won't pay income tax on that. Now, how can we clarify this, that whether it is capital asset or it is a trading transaction? We will determine with the help of some tests which are known as badges of trade. Now go to your lecture notes, read them badges of trade, and then decide if it is a trade or if it is a capital transaction. And after deciding, just write it in commentary style. So the badges of trade is about 5-6 headings, 5-6 different criteria. It doesn't mean that all of them will apply on this scenario. There will be few of them which will be applying to this scenario. There could be all of them as well, but chances are there will be few of them which will be applying to this scenario, right? So after looking at them, then we will decide that whether it is a trading transaction or it is a capital transaction, right? Now, first of all, it says a cat inherited collection of books from her mother. Now, when she has inherited the books, it means which criteria is it coming under? We have seen one criteria, that how we have acquired the asset, how we have get hold of the asset. If the assets are if we got hold of the asset via inheritance or via unintentional gift which we were not aware of, then chances are it will be capital asset. It won't be any trading transaction. Now, as we can see here, the books are inherited from her mother. It shows that it wasn't a trading transaction. Chances are it will be capital transaction because she received from her mother in inheritance. Right, so that is one bit. And another thing as well, frequency of transaction, if you remember from your badges of trade. Now if you are doing transaction very now and then, so if you're doing every day, then it would be considered a trade. However, if you are doing only one-off transaction, like in this case, she's only selling it because she has got these books. She won't be selling after that. After selling them books, she won't be doing the same thing again. And she was not doing before getting these books. So it was only one-off transaction, and chances are, which makes us believe that it is not a trading transaction, it is a capital transaction. So frequency of transaction, if it is every now and then it will be trading transaction. However, if it is not very often, then it will be considered as capital transaction. Right, and after that it says that some of the books are in damaged state. CAT will get them rebound before selling them. Now some of the books are not in very well condition. Of course, they need some mending, and of course she's mending a little, some repair on them. Then she will sell it. Now when you're doing some marketing stuff or you're doing some improvement to an asset, it is an indication that you are doing it for trading purposes. Now only this indicator tells me that it could be trading transaction. However, we only have to rely on that. There are different criteria which we have to see. So overall, if we see, it looks like it is not a trading transaction, it is a capital transaction because she has inherited the asset from her mother. She's only doing it once. She was not doing it before, she won't be doing it after. So chances are it will be a capital transaction, not the trading transaction. So it is worth 5 marks. So even if you find any 3 headings out of the badges of trade, and you elaborate it in a good style, and not just explain the notes bit, not just explain the bookish knowledge, but also apply that bookish knowledge into the scenario. So frequency of transaction. So when you are doing transactions every now and then, it will be considered a trading transaction. Because she is not doing every now and then, she is only doing a one-off activity, one-off selling. So it will be considered capital asset. So that was just an example. So every rule, you not only have to state the rule, but also have to apply that rule according to the scenario. Why this rule apply on this scenario? So you'll have to explain by using the name of the person who is within the question. It makes the examiner look good, because the examiner will think, a candidate is on track, he knows what he's doing. Right? So that's it for now. I will see you in the next video lecture, and we will continue our journey with advanced taxation. I will see you then. Goodbye.